Hello everybody, welcome back to my channel. Today we'll be talking about trading psychology and a few of the myths and pros of psychology within the trading sphere. Just a side note, this video is going to be sort of a quick introduction, so I'll touch on a few things in this YouTube video, and then I'll probably post up one more of an in-depth video at the end of February or the start of March. Here we have a little statement which is 90% of new traders fail within their first year. What does it mean when they say they fail within their first year? Well, it comes down to two main reasons, and that's partly what I'll be talking about today. But when they say they fail, it means they either blow their account, so they lose all of their money in their account, or they just give up because they can't possibly do it. And that's just one thing I want to stress before we go into this video, is trading is not easy. Whoever told you trading was easy is a complete div. It is very, very difficult. You will have times where you feel completely alone, where you can't really understand anything that's going on. You will doubt yourself. You will probably have days where you're winning, but then might have weeks where you're losing. I know I used to sit next to a few traders who had winning streaks for a few months, and then they would just start losing, and it's for no main reason, but you need to know how to cope with those losses, because when they start stacking up, you need to not be rash. You need to keep your calm, and yeah, that's what I'll be going through today. First of all, some myths and truths of trading psychology. So let's start off with social media is mostly bullshit. And I say this because it's 100% true. I say this because whatever you see on social media is not a true representation of what trading is. You'll scroll through so many of these profiles on Instagram and they'll say trade from the beach. Well, how the fuck are you going to trade from the beach when you haven't got any Wi-Fi? How are you going to trade when there's glare on your screen? Silly little things like this, and it puts people into the perspective that trading is, one, easy. Trading is two, accessible from anywhere, which it isn't, and it also gives people the entitlement to already thinking that straight away, without doing any work, that they can make $10,000, $20,000, etc. because they've seen something on Instagram. So why not? Why can't I do it? And then they work out, oh shit, I've lost all my money. So social media is to be taken with a pinch of salt. If you see someone who is offering to sell courses, offering to give advice, well, with the advice, if they're offering to give advice, make sure that they are actually qualified to do so. Most of them won't be. But if you're looking at buying signals from an Instagram marketer or trader, ask them if they're verified. Ask them if they have some third-party verification, such as MyFXBook, FX Blue, FX Stats. What all of these will do is will show you if their accounts that they're showing are verified and actually real, because you'll have a humongous amount of demo traders looking to pass on their signal service, which will be awful, but just taking your money anyway. So before you believe anything on social media, test it. Make sure it is legitimate, just so you're covering your own ass, because 9 times out of 10 it's bullshit. You see on Instagram is not a portrayal of trading. I've worked on a trading desk, a really busy trading desk, and it's nothing like what people say it is. I know it's a totally different business, as in retail trading, but it's someone from Florida, South Florida, who's been trading for 4 years is not going to tell you the secret recipe to trading. He's not going to give you a golden Lamborghini within a year. It's not real. So just one thing you have to learn is just ignore those people. And it links into my other myth of I can make mega bucks like AstroFX whilst trading off my Apple Watch. Fuck off. You can't do that. If you see anyone trading off an Apple Watch or claiming to make money off an Apple Watch, just tell them to fuck off, because you're not going to be able to trade anything on an Apple Watch. So just tell them it's a fallacy. Get out of here. Your phone, yeah, you can make money off your phone using your MetaTrader terminal or your broker's platform, but it's still very, very difficult to actually chart on your phone. So I would still stick to a computer, a laptop, so you can use TradingView or your MetaTrader charts on there. On a bigger screen, it's easier to chart and easier to see your price actions. But if you see anyone trying to prance around like that, just tell them that they're a dickhead and just don't listen to them. So next one is, do I need to eat grass or do I need to buy a salt lamp to be profitable? So you've got two different ideas here, and I've seen it regularly when people are selling courses. People tend to think that with all this toxicity, they think they need to eat all this vegan lifestyle, hipster bullshit, make me one with the earth, and I can see when moon aligns with fucking Pluto and I can make £1 million. No, that's not going to happen. Also, the same with salt lamps. All of this stuff is just made to make money. There's no actual benefits of it when it comes to your trading, because everyone's different. But what I can recommend from a bank trading level is, 1, go outside, get some sunlight. Why sit next to a fucking salt lamp when you can go outside, go for a walk, go for a 10-minute walk, be in the countryside or wherever you are, just literally get outside. Secondly, also do some pure exercise, such as going to the gym, cycling, running, getting that stress out. That would do massive benefits for you in the future, because exercising is a humongous stress relief mechanism. And just learn to chill out. There is no secret to being able to handle the emotions or the lack of emotions in trading. Everyone thinks it's a secret recipe that you can either obtain or purchase or get from just talking to somebody. But what it really is just these simple little parts of your life routinely organized together. That's the only way that you can sum up the sort of the routine of exercising, a bit like a gym routine. If you plan your trading life like a gym routine, then your body will get used to it, your mind will get used to it, and you don't need to dick around with anything else. And then this is a contentious one. I believe it's the law of attraction, but if I dream of a Ferrari, it means I will have one. So for me, the law of attraction is bullshit, and it always has been, because just because you're thinking of becoming rich or purchasing this product in blah blah blah, doesn't mean you're going to get it. You can surround yourself with all these ideas of what's going to happen, but in 5 years' time, you might get run over and die. So where the fuck are you going to fit in your Ferrari if you're dead? That's the way I look at things. Instead of looking to the future, concentrate on what you're doing now. Concentrate on the structure of your life right now. If you are living a really shit life, and I mean as in you're not happy with what you do, change it. Just make a change. And I don't mean quit your job and learn how to trade. I mean, look at where you're unhappy. If it's a relationship you're not happy with, try and sort it. If you can't fix it, then try and remove it. Try and take as much toxicity out of your life, from if it's friends that are just clinging on, relationships, as I said, studies. Just trying to find a way to fix that. And if you can't find a way to either, such as with studies, you can't get rid of your studies, but find a way that will work for you. And then you will feel the benefits of it once you're finished. But dreaming about some shit in the future is not going to have an effect on what you do now. So I find law of attraction just to be a bit bullshit. a bit like these Instagram posts about making all this money and everything else. Yeah, it's a demo account. So what do beginners struggle with the most? And a lot of beginners come to me, a lot of my students come to me and tell me what they're struggling with. And this isn't spot on, but this is kind of the gist of both of them. So first of all, you have FOMO, which is the fear of missing out. So this can be easily described by any little chat room that you're in or WhatsApp trading group. There are loads. Quite a good example would be the FOMO in cryptocurrency, because everyone wants to be buying into the next Bitcoin or whatever this shitcoin is, and when they see people starting to buy into stuff and saying, "Oh yeah, I've made 100 billion% return in 25 minutes," they're thinking, "Oh my fucking god, this is the best thing." So what they will then do is take this trade, even though they've done no analysis whatsoever, and expect it to pay off because someone else has said, "Oh yeah, I've made this much in blah blah blah," and then they'll do their arse in. They'll have to wear a nappy for a week and realize, "Oh shit, I've lost all my money because I've listened to all these other people without doing my own analysis." So I think sometimes it's good to learn to miss the opportunities that other people bring to you. Take the opportunities that you create, unless you're 100% certain that this opportunity that has been given to you by someone else, such as a trading signal or something like that, is legit. Obviously, that if it is 100% legit, you still might lose it, but it's better than doing your arse in on a bit of hope. The next one is lack of routine. So this is a bit of a contentious one because not everyone sort of understands it fully. But an idea I have is, have you ever regretted taking a trade that you took maybe sitting on the toilet or out shopping in Tesco's or wherever you are in the world, and then you've looked back at it in the afternoon or in the evening and thought, hold on a minute, why did I short the euro against the dollar at the bottom when my analysis clearly says now that I shouldn't have done that? And that kind of that is a beginner error, but a lot of pros still do that as well. But the idea of that is there's no routine for that. You shouldn't be placing your trade if you're sitting on the toilet or if you're sitting in Tesco's or in the library. Why are you doing that? That is just that's pure FOMO as well. That's also lack of routine, and that's just a boredom trade. And those boredom trades will mount up to something quite serious if you don't sort of stem them at the start. So just be aware when you're maybe sitting with your family or sitting in front of the TV that you don't just take these trades off of a whim, because there's no real thought behind it, and you're just wasting your time really and your money. So another huge part of beginners and the psychological effect is revenge trading, and this can be purely summed up from that first paragraph. So you were certain that the pound would drop against the dollar in the NFP. You lost 20 pips, an acceptable amount, but you can't handle the idea of actually losing that trade when you thought you were going to be right and you were adamant you were going to be right. So what does any sane person do? They go balls deep on another short. Why wouldn't you go short? You throw in everything. You're watching. You're waiting. You're twiddling your thumbs. You're ignoring everything else that's at your disposal. You're ignoring your analysis. You're ignoring your trading plan. You don't really give a fuck, because if you win, you're right. But on a correction, you might get lucky and win a few. But as I've said, you'll be bent over and slapped by the markets because they don't care for you. They don't care for your money. And at the end of the day, it's a sad story, but a lot of accounts are blown purely from revenge trading, because they've had their initial plan of maybe shorting the dollar against the yen. So say you've shorted the dollar, so you've sold the dollar against the yen, but your stop loss was hit. So that's your original plan has now stopped because obviously your stop has been hit, and it's time to go back to the drawing board to look at other opportunities elsewhere. But instead of doing that, you think, oh, for fuck's sake, why has this happened? So then, without even doing any more analysis to see if the trend has changed or anything else has happened, you've just entered into another short. So you are asking to literally just be pickpocketed by the markets, and it's a sad truth, but everybody does it. It's just knowing when to stop. So improve or lose. So this is just to round up everything we've been over. I know you're not going to be able to change overnight. So what a good thing to do is, if you are a revenge trader, is maybe cut down the contracts or the lot size of your trades. So imagine if you're trading a 0.10 lot, try and cut that down to a 0.1. Obviously, if you were right, you won't get as much money in profits, but think about it, if you're wrong, you're not going to lose as much money. Because if you are a beginner and you are being a bit of a revenge trader, you will have losses mounting up and they will rinse your account. You will lose. So here are some key areas that I would personally put into your daily life and spend some time on, getting to know, getting to improve. Like I said, I will be bringing out a in-depth trading psychology video, but this is just a short one I wanted you to experience, because not everyone needs to know psychology in depth, so they might pick up some great pointers from this video. But first of all, sleep. So sleep is massively important. Anyone who says it isn't is fucking idiot. So enough of this entrepreneurial bullshit about how can I sleep when I can make money during the night, and sleeping is for losers. Fuck off. How can you make money if you're not working at your best? If you're honestly working through the night trying to create something, you need to actually have a look at what you're doing. A lot of the time people will be saying they're doing this, but they're actually doing fuck all. So try and get at least 6 hours a night. That's how much I've now started getting. After working in a bank trading, my sleep schedule was fucked, but that wasn't me doing useless stuff. That was me purely commuting and staying late and other matters like that. So when you're a home trader, it's easy to become bogged down with a lot of bullshit, and you think, okay, if I'm gonna go to bed about 3 o'clock, then I'll cover a few charts, and come 2 o'clock in the morning you're looking at YouTube at fucking trading psychology. So you haven't used that whole amount of time to your advantage. So my advice would be just sleep, because you will feel a whole lot better. Secondly, exercise. So like I said before, get outside, go for a run, go to the gym, go for a cycle. Anything to get rid of that stress, because you will have stress. Trust me. Also, on a side note with exercise, try and drink a lot of water. And this can help for a few things. It can boost your concentration, boost the way you feel. You'll feel a lot healthier. There's been scientific studies done into it, and sleep. So it's worth the try. It's not going to happen overnight, but if you start it for a month, you might feel the benefit. Thirdly is routine. And this kind of ties in with trading plan, but this is probably the most important out of all of them, because it encapsulates them all. You need a routine of your daily strategy, as per se. You need to know when you're going to wake up. You need to know when you check these data points or these fundamentals or check your charts. You need to be militarized. You need to be ready to do stuff when it needs to be done. And you're not going to be able to achieve that if you don't set up a routine for your body. There's no point saying, I'm going to wake up at 4 a.m. in the morning if you've gone to bed at 3 and you're not used to it. So just get your body into routine, especially the same with the exercise routine, and you will feel a benefit. Fourth is trading plan. So this is humongously important for beginners and for some pros, but mostly beginners, because I would say 9 out of 10 beginners don't have a trading plan. They don't know what they're looking for. They don't know when they're going to enter. They don't know when they're going to exit. They're looking at every fucking pair. They're looking at flipping the US against the Mexican peso, or the US against the fucking Russian currency, which I don't even know what the fuck it is. It's like the ruble or whatever it's called. You need to stick to maybe 3 currency pairings, and I would also go for 1 commodity, so gold, and maybe 1 index, so maybe the S&P 500 or the FTSE 100. And the reason why I say 3 currency pairings is choose the most 3 popular currency pairings, because they will have the most liquid moves in them, they will have the most money flowing through them, and you'll be less likely to be taken out by humongous moves because of lack of liquidity. So in that, I'd probably have the euro against the dollar, maybe the US dollar against the Canadian dollar, or the Australian dollar versus the US dollar, and then thirdly the euro against the British pound. And on this trading plan, what you want to have is, like I said earlier, your entry and exit points, what you will look for to exit a trade, how you will exit it, if it's a case of moving your stops to your break-even level and then taking the profits, bits like that, just so you know when you're going to trade, so what time during the day, whether you're not going to trade in the evening so you can spend some time with the family, or spend an hour or 2 on reading a book or going to the gym, stuff like that. Just get yourself into that routine of creating this plan and sticking to this plan, because there's no point creating and doing all this work if you're not going to stick to it. After that, you want some 5 to 10 minute breaks, and I don't mean take a break when there's key news on. Take a break when you're not doing anything, you're not looking at a chart, you're just looking at your screen. Take a 5-minute break, go get a coffee, go get some water, or you can take a 10-minute break, just go for a walk in your garden or walk outside, go get some milk. It just helps you from, especially if you're a home trader. I found those who home trade don't really get out of the house, so having a break helps by either seeing people or just changing your environment, because you'll get very, very depressed very, very quickly if you stay in the same room. And then we next have spend time on your strategy. And this is one thing that beginners really don't do. They'll be bolting from one strategy to another as quickly as possible. If it doesn't work in a day, fuck it. Let's go buy another strategy, or let's go use another strategy. You need to learn this strategy. You need to also learn how you can spot when it's going wrong, and you need to know what to do when it does go wrong, so you don't lose all of your money. The thing is, your strategy might not work in one market condition which you're in at the moment, but it might work perfectly next week, and from next week perfectly for the end of the year. So be careful of regurgitating strategies, because a lot of the time beginners will just move on before they've actually experienced what the strategy is about. So just bear that in mind. Don't start ditching them and moving on to another one, because it's really not worth it. Obviously, if you've got a really, really poor strategy to begin with, then it's worth taking a look at. And then finally, This should come to no one as a surprise. Strict money management. And I say this because if you're risking 100% of your account on one trade, you're going to fuck yourself up. Because, yeah, you might win that one trade, but if you do it again, you're going to lose it. Get used to setting yourself risk level targets. So for me, it's a maximum risk of 2.5 to 3% per trade. So that's a 2.5 to 3% of my account on one trade. I know people who have risked 20, 30% and gotten really, really cocky. And I'd say to them, you need to watch it, because if you're not careful, you will be taken out. You'll lose 3 or 4 in a row. And what you're going to do then? You're going to start crying because you've blown your account and say, oh, fuck the markets, fuck the banks, these insiders. No, it wasn't the insiders. It was you being careless with your account. Please take care of your money. There's nothing worse than I see than people either losing their money to scammers or just losing their money for being careless. This is your hard-earned money, so please don't mess around with it. So teach yourself good risk management. I'll also be sending out a quick video probably at the middle of February covering some basic risk management if you're not used to it. But just please take care of it. Make sure that you're not risking more. Cut down on contract lot sizes if you need to. Stop placing so many trades. There's no point placing 10 trades all in the same direction, 1 pip apart, because you're just using your margin up. And try and close 10 trades on MetaTrader app when your internet is lagging. Good luck with that. I hope you've all enjoyed this. It's, like I said, it's just a quick introduction. So take care, everybody. I'll let you know when I'm next uploading, and I look forward to the next video. Thank you very much.